President Trump's sweeping tariff announcement sent global financial markets tumbling and sparked concerns worldwide. Trump and the White House shared a series of charts detailing the tariff rates they say other countries impose on the US. You've probably seen them. It's a list of over 180 countries and territories, including the European Union, that'll face tariffs. The administration said the new tariffs are in most cases half of what the White House claims each country has, quote, charged the US. CNBC couldn't independently verify the administration's data on these duties. So how exactly did the White House determine its tariff figures? It didn't take long for market observers to try and reverse engineer the formula. Many, including this journalist, said that the US appeared to have divided the trade deficit by the imports from a given country to arrive at the tariff rates. This methodology doesn't necessarily align with the conventional approach to calculate tariffs and would imply the US only looked at the trade deficit in goods and ignored trade in services. So for example, the US claims that China charges a tariff of 67%. The US ran a deficit of $295.4 billion with China in 2024, while imported goods were worth $438.9 billion, according to official data. When you divide those two numbers, the result is 67%. The same math checks out for Vietnam. The US also appeared to have applied a 10% tariff for regions where it's running a trade surplus. The Office of the US Trade Representative outlined its approach on its website, which appeared somewhat similar to what people online had already figured out. This screenshot of the USTR webpage shows the formula that was used in greater detail. For more on how the Trump administration arrived at its reciprocal tariff rates, check out our full story on CNBC.com.